Let us see what are accounting ratios and types of accounting ratios. Accounting ratio. Accounting ratio is the relationship between two financial data which are used for analyzing the financial statements of the companies. Accounting ratio is nothing but comparing the two financial data to analyze the ratio between two financial data to know the financial statement of the company. Let us see what are the types of accounting ratio. There are mainly 5 types: liquidity ratios, asset turnover ratio, financial leverage ratio, profitability ratio, and dividend policy ratio. Under liquidity ratio, there are two ratios. Current ratio. To calculate the current ratio, we use the formula current assets divided by current liabilities of the company. To calculate the cash ratio, cash plus marketable securities divided by current liabilities of the company. Under asset turnover ratio, receivable turnover ratio and inventory turnover ratio. To calculate receivables turnover ratio, we use the formula annual credit sales divided by accounts receivable. To calculate inventory turnover, cost of goods sold divided by average inventory. Financial leverage ratios, there are two: debt ratio and debt equity ratio, debt to equity ratio. To calculate debt ratio, we use the formula total debt divided by total assets of the company. Debt to equity ratio, total debt divided by total assets of the company. Under profitability ratios, return on assets and gross profit margin. To calculate return on assets, net income divided by total assets. To calculate gross profit margin, sales minus cost of goods sold divided by sales. Dividend policy ratios or payout ratio and dividend yield ratio. To calculate payout ratio, dividends per share divided by EPS, earning per share, DPS divided by EPS. Dividend yield ratio, dividends per share divided by share price. Thank you.